How's it going, everybody? My name is Jesse. Welcome back to Continues to Tick. So one thing you're going to notice this week is in my last video we were at $4,700. This week we're going to be at $5,500. So we did cross the 5K mark, and we crossed it by quite a bit. It's not because I had any gains. It's because I funneled in even more money than what I usually do. About 2 weeks ago I had a pretty good buying opportunity and I passed it up. I was like, I'm trying to remain consistent to my actual game plan and just invest once a week, do it consistently, be disciplined about it, and anything extra, save it for real estate. I already have an emergency fund in my savings account, which isn't making any interest, by the way. If you haven't noticed, check your savings account. For me, I have all my money in Ally Bank, and it almost seems like at least once a month they're cutting down the interest that they're paying me, the percentage. They're cutting it down. I think it was today I actually got another email saying they're going to cut it another percentage. So it's crazy. It's like they want you to throw your money out and buy stuff or throw it into the market. So it's better to be playing the game to not be in the game, is what I always tell myself. Like I said 2 weeks ago, I passed up a good opportunity to invest. I think the overall market, the Dow Jones in particular, which I do follow, and it kind of follows the whole overall market, which is why I say that. About 2 weeks ago, it dropped 800 points. So it was tempting for me to buy, but I decided ultimately not to and just stick to my guns and stick to my $500 once a week. So come this Monday, the market dropped again. It dropped about 500 points, the Dow Jones. And I was like, you know what? My whole portfolio is in red. I am investing for the long term and I am investing for dividends. But there's a couple things that happen when the market is red or when your portfolio is red. For one, I could buy more shares of a company, and buying more shares or holding more shares, it leads to more dividend income coming in. The percentage yield is of one share that you hold. So the more shares that you have, the more dividend income you get. On top of that, which is really nice, is when you're investing for the long term, it doesn't matter as much, but it's nice to have a green buffer. It's nice to see your portfolio in the green. It's like a psychological effect. And when there's a sale going on, you're just kind of building up your cushion. You're building up your percentage return. You're building up that growth. It's like an easy way to do it. Instead of buying and holding a company and waiting for it to go up, if you see that it's on sale, it's better to go ahead and buy into that company. And buying that company, you're already buying it at a discount. So you're already putting yourself at an even greater placement to see growth, if that makes sense. So as I said, Monday was a nice juicy red day. So I was like, you know what? Instead of throwing in my $500 on the typical Thursday, which I always do, I'm going to throw it in on Tuesday. So I was contemplating, debating. I was like, should I also invest on my Thursday that I always do? And I was almost not going to, but then Wednesday came about and then the market dropped again. And I was like, you know what? I'm going to just stay consistent to my actual game plan and still invest on Thursday. That brings us now to the Jesse's cash flow portfolio of $5,500. So a big difference from last week's video where we were at $4,700. I knew we were going to cross the 5K mark. I didn't know we were going to cross it this much. But like I said, it didn't happen because of gains. The gains were non-existent. All time, my portfolio is in the red. It's the most red I've seen it since I've had this portfolio. Close to 7%. And it was 7, almost close to 8% before I had bought on Tuesday. It's kind of like putting in water into a cup that has a hole, which isn't a great analogy when it comes to money because it's almost like you're wasting it. But when you think about a portfolio, and if it's well structured, technically it's going to go up and that hole's going to get clogged up, if that makes sense. And then the water's going to overflow, but you're going to overflow that water into another bowl that's underneath that cup. So you're not letting it, that water's not going to waste. You're going to keep collecting it. You're accumulating it. And ultimately you're going to have more water, aka more cash, more money.
What? Bro, what are you talking about, man?
As you can see here, September 24th, which is today, the Thursday, it's my typical deposit day. It's every Thursday, once a week, and I throw in $500, and I have auto invest, so it auto invests all that money. As I kind of mentioned in the last week's video, we're starting to see that snowball effect. As you can see here, I got paid by SPYD, which is the high dividend ETF, $4.30. This was the most I've gotten from any company or from any one holding. So as you can see here on the 504, and 20 cents, it took this $4, so it reinvested that into purchasing shares into the companies. So here it is, September 22nd. This is what I was talking about earlier. This was Tuesday, the day after the big drop on Monday. This is the Tuesday that I was talking about where I threw in another $500 technically from this week into the portfolio. and here were the purchases from there. So I'm still trying to stay disciplined. I'm still trying to stick to my game plan. The reason why I'm hesitant sometimes to throw in additional funds into my portfolio is because ultimately I'm trying to invest in real estate as well later down the line. I do live in California. I'm pretty much tethered and chained here just because I work for the state of California, and I'm really trying to go after that pension. I'm trying to have that pension, this dividend portfolio, and some real estate, all just nest egging, my future, providing me a nice, pillow to sleep on in the future of, cash flow, passive cash flow. So ultimately that's part of the goal. I'll probably dig deeper into that in a future video, but just in summary, that's what I'm trying to aim for. And real estate here in California is quite expensive. So I do have my emergency savings account, and anything extra on top of that, I'm building up for, a down payment on a house. Right now, I'm currently still renting an apartment, my girlfriend and I, our puppy. And ideally, sometime in the future, hopefully soon, we would like to get a house and start to settle down, build some equity in there, or buy a duplex, quadruplex, rent one, house hack the other. Right now we're renting, which is nice. It gives us a lot of freedom, but ultimately that's another thing I want to do later down the line. Anyways, guys, I'm rambling. I do tend to do that towards the end of the videos. But here we are this week, $5,500. I hope you guys are doing well. Just for an update, I still haven't pre-ordered the PS5. It's been non-existent since the last video. I don't know if I'll actually be able to pre-order. I'm trying to throw my money at this PS5 console. Sony just doesn't want it. They don't want to take my money. It's like I'm literally just trying to throw it at them, and they don't want to take it. I'll see you guys on the next one.